PantheonAI presents Markets Climb, Nvidia in Focus, Ethereum Pops, and Apple Tariff Drama. Welcome to the PAI Morning Briefing. I'm your host, and today is May 27th, 2025. Good morning, everyone.
Good morning, Host A. Hope you're all settling in with that strong cup of coffee because we've got a lot to unpack this morning, don't we?
Absolutely. Let's dive right in with a quick market overview. We're seeing modest gains across the major indexes this morning. The S&P 500 is sitting at about 5,897.18, up around 0.736%.
That's a solid start. And the Dow?
Right behind it. The Dow Jones Industrial Average is at roughly 42,125.7, up about 0.661%. Over at the Nasdaq, we're looking at 19,118.8, an uptick of about 0.55%.
So a pretty consistent theme across the big players then. What about the smaller cap stocks, like the Russell 2000?
Even microcaps are on the move. The Russell 2000 is trading at about 2,076.9, up roughly 0.86%. It's good to see that broader market participation.
Definitely. Now switching gears to digital assets, what's happening in the crypto space?
Bitcoin's holding strong at around 109,662.4, with a very modest increase of close to 0.19%. But Ethereum, that's been quite the standout today.
Oh, really? How's Ethereum looking?
It's got a gain of nearly 3.765%, now at about 2,661.1. So while some of these moves might seem slight, it's a clear reminder that cautious optimism is still ruling the crypto markets as investors weigh risk and reward in these volatile times.
Yeah, definitely. It's always a balancing act there. So now that we've got the big picture laid out, let's dive a bit deeper into the trends driving these movements.
One of the primary themes we're seeing today is this pronounced focus on technology stocks, especially amid geopolitical tensions and shifting global supply chains. All eyes are on Nvidia this morning.
Nvidia, the semiconductor giant. I heard they're set to release earnings soon, right?
Tomorrow, actually. The anticipation is palpable, and for good reason. With ongoing restrictions from China playing a significant role, one analyst is cautioning investors that seeing much upside in Nvidia's forward guidance might be challenging.
So is this just a fleeting concern, or could it signal broader pressures on tech earnings across the board? It feels like we're waiting for a plot twist in a suspense novel. You know, something significant is coming, but we're not quite sure of the climax yet.
Exactly that. And speaking of tech and trade, another area generating buzz involves Apple. There's been notable commentary from a Trump advisor named Hassett.
Oh, what's he saying about Apple?
He stated that the goal is we don't want to harm Apple with any potential iPhone tariffs. This really reinforces a broader strategy where policymakers are trying to strike a balance between defending domestic interests and not sabotaging the very giants they rely on for innovation and economic growth.
That's a sophisticated dance, isn't it? Ensuring protectionist measures don't inadvertently tip the scales against an industry that drives so much market sentiment and the economy. For investors, these nuances are critical for understanding how trade policies might unfold.
They really are. Moving on to another sector capturing attention, the auto retail landscape, specifically AutoZone. They reported their third quarter earnings, and unfortunately, they missed Wall Street's expectations by a considerable margin.
Oh, that's tough. What happened?
Rising costs are continuing to erode margins. Even though U.S. same-store sales growth provided some positive momentum, international weaknesses couldn't be ignored. The report led to an extended pullback in AutoZone's stock.
It's a reminder that even storied brands with solid fundamentals have to contend with a rapidly changing economic backdrop. Like trying to steer a large ship through unexpected stormy waters, right?
A perfect analogy. Now, over in the foreign exchange arena, the EU-RUSD pair is also grabbing our attention. Technical analysts note that its rally stalled just ahead of a crucial 61.8% retracement level.
61.8%. That's a key Fibonacci level, isn't it?
It is. The high price touched about 1.1375 before rotating lower and eventually dipping below the 100-hour moving average, which is now around 1.1345. This technical move suggests sellers are starting to lean into the market, and downside pressure might be building.
So for those active in Forex or looking to hedge currency exposure, these dynamics provide valuable context. It really highlights how interconnected our financial systems are, doesn't it? A small shift in EUR-USD can have ripple effects across other markets.
Absolutely. It's not just about semiconductor chips with Nvidia. It's about a company embedded in nearly every conversation about AI, gaming, and data center innovations. These global pressures, regulatory challenges, and competition could push them to be cautious in their earnings call.
And investors, always searching for that next growth engine, now have to balance these exciting prospects against potential headwinds. It's a tricky line to walk. And speaking of balancing growth with caution, those repeated mentions of the Trump advisor's reassurances regarding Apple's tariffs are interesting.
Yeah, it suggests the market understands the delicate balance at play. While tariffs spark concerns, the messaging indicates a commitment to avoid abrupt disruptions. It's like a parent gently nudging their child to share toys, rather than just snatching them away.
Haha, that's a great analogy. Of course, in the high-stakes environment of international trade, the stakes are much higher, and the negotiation is a slow, deliberate dance. Beyond tech and trade, we can't ignore the auto sector narrative with AutoZone. That pullback is a signal that rising input costs and global supply chain issues are still very much a factor.
It really begs the question, are we seeing a temporary pause in robust consumer spending? Or is it a sign of more systemic challenges looming? For those invested in corporate earnings, these mixed signals can feel like solving a complex puzzle with shifting pieces.
It sure can. And then there's the technical breakdown in the EUR-USD pair. That 61.8% retracement level isn't just a number. It's a psychological barrier. When it dips below key moving averages like the 100-hour line, it often signals a shift in market dynamics.
Precisely. It makes you reevaluate risk. And when we merge these stories into a broader sector analysis, in tech, Nvidia's earnings call is a prime example of innovation meeting market skepticism. It highlights both the potential and the pitfalls tech companies face in this new era.
And the cautious approach from policymakers regarding Apple tariffs really illustrates that broader theme of tempering aggressive protectionist policies with realism. It's all about avoiding unintended collateral damage to domestic industries.
It really is. Together, these stories underscore the importance of balancing innovation with risk management, which is so relevant in today's market. Now, from an energy perspective, we haven't seen major headlines directly impacting oil or gas today, but it's worth noting that global adjustments in supply chains and trade policies could indirectly influence energy markets.
That's a good point. If tariffs slow economic activity or alter manufacturing, we could definitely see fluctuations in energy demand. It's a reminder that all sectors are intricately linked in this complex economic web.
Exactly. In finance, the performances of the major U.S. indexes reflect a healthy, albeit cautious, market sentiment. Gains in the S&P 500 and the Dow, while modest, signal investor confidence in an environment that's still very much in flux.
It's like watching a tightrope walker who's mastered the art of balance. The market is cautiously optimistic, yet always prepared for a gust of wind that might throw off the equilibrium. Those modest upticks really suggest investors are taking a measured approach.
They are, deploying capital carefully while remaining open to opportunities. On the global stage, the implications of these developments are significant. With Nvidia, we're reminded that global supply chains aren't just about physical goods. They're about ideas, innovation, and international competition.
And the discussions around tariffs and that careful balancing act from the Trump advisor are emblematic of how geopolitics and trade relations continue to shape investor sentiment, not just in the U.S., but globally. No market operates in isolation, it's true.
Right. Whether you're trading equities, bonds, or currencies, events in one corner of the world can quickly ripple through the global economic system. So as we pivot to some expert insights, let's ask ourselves a few thought-provoking questions.
Okay, hit me with them.
Will the anticipated Nvidia earnings call ease or exacerbate concerns over China's tightening grip on technology supply chains? And if pressures build, could it send ripples across the broader tech industry, forcing resilient companies to rethink growth strategies?
Those are big questions. And how might the caution expressed by policymakers regarding Apple shape future trade negotiations, especially when other protectionist tools are still on the table?
Exactly. And finally, what does the technical breakdown in the EUR-USD pair signify for broader market momentum? Is it just a correction, or is there potential for a deeper reassessment of risk sentiment in global markets?
Those are the million-dollar questions, aren't they? From my perspective as a financial analyst, I see these developments not as isolated incidents, but as parts of a larger mosaic. Our technology sector, exemplified by Nvidia and those cautious remarks concerning Apple, really serves as a barometer for both innovation and vulnerability.
It's a sector that's as exhilarating as it is unpredictable. And on the other hand, the narrative of AutoZone and the technical signals in the currency markets remind us that sometimes the everyday realities of rising costs and market corrections are just as important as the headline-making breakthroughs.
You know, I find it quite amusing how every market report feels like a cliffhanger episode of a long-running TV drama. One day you're riding high on optimistic indexes, the next you're deep in analysis over a dip below a moving average. It's like the market itself has a sense of humor.
Like that one friend who always shows up with a mischievous grin when you least expect it. It keeps us on our toes, even when we think we've seen every possible twist and turn. Taking a step back, the steady rises in the major indexes and select cryptocurrencies like Ethereum suggest underlying economic resilience.
Even Bitcoin's slight uptick offers a glimpse of stability amid volatility. Yet those mixed narratives, rising costs for AutoZone, tech uncertainties due to geopolitics, and those EUR/USD technical signals, they all remind us that every bright spot has its shadow. For investors, it's a call to diversify and remain agile.
Absolutely. And looking deeper into the technical aspects of the EUR/USD, it's clear how closely tied technical indicators are to investor psychology. That 61.8% retracement level isn't just a number. It's a critical threshold where market sentiment can quickly shift.
When the pair falls below key moving averages, it's a reminder that even sophisticated investors must keep an eye on time-tested principles of technical analysis. It brings home the point that we can't lose sight of the fundamentals that guide trading decisions worldwide.
Right, so while we're pondering these market dynamics, I want to bring it back to you, the listener. What does all this mean for your portfolio? Are you equipped to navigate a market where each day brings a slightly different challenge?
Whether you're a long-term investor or an active trader, these developments might inspire you to re-examine your risk management strategies, diversify your assets, or even consider emerging segments less correlated with traditional movements. That swing in Ethereum, for example, might have you thinking about decentralized finance.
And the caution around Apple tariffs could signal to tech investors that the policy landscape remains dynamic and deserves careful watch. While we're on diversification, let's touch on energy and finance, even if they're not the headlines.
Good call. Energy markets are highly sensitive to global supply disruptions and demand shocks. Even a seemingly unrelated policy adjustment in tech, or a fluctuating index, can have ripple effects on oil and gas prices. It's that intricate interplay that makes our markets endlessly fascinating, and sometimes maddeningly unpredictable.
So true. In finance, the interplay between rising indexes and cautious investor behavior highlights a kind of delicate optimism. We're witnessing a market that values incremental progress and measured gains. Every rally is tempered by the reminder that the next twist could be just around the corner.
Exactly. And as we share these insights, I encourage you to reflect on your own investment philosophies. Are you more inclined to ride the waves of these modest gains, or do you prefer to brace yourself for a sharper downturn? Those are the questions experienced market participants consider daily.
And no textbook can answer definitively. If you're wondering about the outlook for tomorrow and the days ahead, I'd say the answer lies somewhere in the balance between optimism and caution. With Nvidia's earnings call looming, there's a tangible degree of uncertainty in tech.
The expectations from analysts and that cautious tone suggest we might see volatility post-earnings. And while volatility can create short-term pain, it's also where opportunities often lie, provided you're prepared and have a strategy.
As we round out today's discussion, let's summarize a few key takeaways. First, while major indexes and cryptos show modest gains, they're supported by an underlying current of caution, especially in tech. Nvidia's upcoming earnings are being watched very closely, and those China restrictions add complexity.
Second, the policy remarks regarding Apple tariffs highlight an ongoing effort to navigate the fine line between protectionism and market stability, which could have far-reaching implications for one of the world's most valuable companies.
Third, the AutoZone situation underscores that even companies with strong brand recognition aren't immune to rising costs and international market weakness. And finally, the technical update in the EUR/USD pair reminds us that in our interconnected markets, every technical signal holds weight, not just for Forex traders, but for the global market generally.
Looking ahead, I'm particularly interested in seeing how these stories evolve. Will Nvidia's earnings validate the cautious narratives? Or will they surprise us with robust guidance despite challenges?
Can policymakers effectively balance protecting domestic industries without hindering innovation? And for those trading or investing in Forex, can the EUR-USD pair rally back to its previous highs? Or is this dip the beginning of a longer-term correction?
These are the kinds of questions that make market analysis both exhilarating and essential. Before we sign off, I want to leave you with some thoughts to mull over. How do you view the balance between short-term fluctuations and long-term growth potential in such a dynamic market?
Has the evolving narrative around trade and tariffs influenced your investment decisions lately? And in what ways are you positioning your portfolio to navigate both the opportunities and challenges ahead? We'd love to hear from you, so don't hesitate to reach out.
It's been a privilege sharing these insights with you this morning. Remember, PantheonAI is here to serve as your information copilot, providing you with clarity and expertise. We hope you found our discussion engaging and thought-provoking.
Come back tomorrow for another deep dive into the world of market trends, earnings call previews, and the fascinating interplay of global events. After all, learning shouldn't feel like a full-time job. Thank you for joining us today, and have an excellent day ahead.
PantheonAI, your information copilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.